Hi there, Shingirai here again with another update on portfolio performance over the past week. On a one-week basis, 6 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from 1.97% for CBAM 5 down to 0.93% for CBAM 1v2 in a relatively risk-on week. We did get some good news coming out of China with the annual Congress meeting in China and Beijing announcing possible fiscal stimulus in order to revive the economy there, being taken as a generally positive sign and promising some more support for that distressed real estate market, and that was taken as positive by the markets, seeing our returns from Bailey Gifford China all the way up to MSCI China ranging from 4.65% up to 5.07%. We did see some headwinds there for global government bonds, especially in anticipation of this week's interest rate hikes coming from both the US Federal Reserve Bank and also the European Central Bank, and that would be taken as a headwind for longer dated government bonds as reflected in the performance of Vanguard US government bonds alongside Vanguard European government bonds as well. In anticipation of this interest rate hike as well, we did see some strength from dollar, improving 1.76% against sterling on the one-week basis as well. On a quarter-to-date basis, 5 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 5 returning 2.04% down to CBAM 1 returning 0.90%, and we continue to see that sustained strong performance from HSBC MSCI China on a quarter-to-date basis, up 4.86%, and then that resilience you see in the domestic UK economy and increasing resilience as well in the wage growth, seeing that unemployment figures also remaining low, leading to a scenario where there has been a bit of tailwinds really for the FTSE 250 mid-cap companies, up 4.22%, and then again we just see Columbia Threadneedle also returning a plus 4% return on a quarter-to-date basis as well. We continue to see some strain there from the Hypnosis Investment Songs Trust, despite relatively robust earnings and just needing a bit more of that thesis to be tested, perhaps through a divestiture from their catalog, just really proving that correct discount rate used for valuation of royalties associated with the catalog. We also saw some headwinds there for European smaller companies, down 50 basis points on the quarter-to-date basis. But then again, we also continue to see that narrative of a strengthening sterling, up 1.11% versus dollar on a quarter-to-date basis. And then finally, this week we saw some PMI data coming out of Europe, UK and the United States, indicating some weakness still expected for global economies. And there we did see 2 interest rate hikes, as I alluded to earlier, from the Federal Reserve Bank in the United States, alongside the ECB in Europe, both choosing to hike their interest rates by 25 basis points each, respectively, leaving the rates at 5.5% and 4.25% for the Fed in the United States and the ECB. We also got a resilient reading for US GDP figures coming out at 2.4% for the second quarter of the year. And then we're looking forward to also seeing some PCE price index as we just wrap up the week.